For centuries, a single city reigned supreme. Its whispers dictated global commerce. Its coffers held the world's wealth. London, the undisputed titan of finance. But beneath the gilded facades and labyrinthine alleys, a seismic shift was already underway. A covert battle waged not with cannons, but with currencies. A silent, relentless usurpation. What if the very pillars of London's power secretly carved out its eventual decline? This isn't just history, it's the genesis of modern financial dominance and the untold story of how the world's greatest financial empire ceded its throne. At the dawn of the 20th century, London's financial preeminence was an immutable fact of global economics. The square mile, home to the Bank of England, the Royal Exchange, and countless merchant banks, served as the world's financial meridian. From its hallowed institutions, capital flowed to every corner of the British Empire, underwriting vast enterprises, constructing railways across continents, and financing international trade. Sterling, the British pound, was the bedrock of global commerce, universally accepted and backed by the gold standard. London was not merely a financial hub, it was the gravitational center of the world's economy, a status cultivated over centuries of mercantile expansion and imperial dominance, particularly through the unprecedented influence of entities like the East India Company. This mercantile empire had meticulously woven a complex financial labyrinth that commanded an unparalleled dominion over international markets, dictating the terms of global capital and ensuring its fiscal supremacy. America's industrial ascendancy and nascent financial power. However, across the Atlantic, a new economic power was rapidly burgeoning. Post-Civil War America, freed from the shackles of internal strife, embarked on an era of unprecedented industrial expansion. The vast continental resources, coupled with a fiercely entrepreneurial spirit, fueled the rise of industrial behemoths in steel, oil, and railroads. These colossal ventures demanded commensurate capital, which, while initially sourced from London, increasingly found its genesis in New York. Wall Street, once a parochial financial district, began to mature into an ambitious, dynamic center of capital accumulation. Men like J.P. Morgan, John D. Rockefeller, and Andrew Carnegie were not merely industrialists, they were financial architects, shaping an independent American economic infrastructure. The sheer scale of American domestic markets and its burgeoning industrial output created a magnetic pull for investment, subtly drawing capital away from London's established networks. This nascent financial power, while still overshadowed by London's global reach, was building an internal momentum that would soon challenge the existing world order. The catastrophe of World War I, from creditor to debtor. The true catalyst for London's eventual fiscal dethronement arrived in the cataclysmic form of the First World War. Britain, initially the world's wealthiest nation, found itself facing an unprecedented financial burden. The insatiable demands of total war, funding troops, manufacturing munitions, and sustaining its allies, rapidly drained its national treasury. What began as an extension of credit to its European partners quickly devolved into a desperate search for liquidity. Britain, once the ultimate creditor nation, was forced to liquidate its vast overseas investments, particularly those in the United States, and critically began borrowing extensively from America. The United States, initially neutral, then a belated combatant, emerged as the world's preeminent creditor. Gold, the ultimate measure of wealth, began a monumental transfer across the Atlantic, flowing from the vaults of the Bank of England to the Federal Reserve in New York. This homogeneous hemorrhage represented a fundamental reordering of global financial power. Britain's once impregnable financial fortress had been breached, not by direct assault, but by the relentless exigencies of modern warfare, leaving it fiscally weakened and strategically vulnerable. The Roaring Twenties, divergent economic fortunes. The aftermath of the Great War saw a stark divergence in economic fortunes. While London grappled with staggering war debts, widespread unemployment, and the gradual unraveling of its imperial trade networks, America entered an era of exuberant prosperity, the Roaring Twenties. Propelled by mass production, consumerism, and a speculative fervor in its stock markets, the United States experienced a period of unparalleled economic growth. Wall Street, now flushed with capital, became an increasingly attractive hub for global investment. American banks, once reliant on London for international finance, began to extend loans to war-torn Europe, effectively reversing the century-old flow of capital. London, beset by economic malaise and clinging to a rapidly diminishing gold standard, struggled to regain its footing. The pound sterling, though still a significant currency, found itself increasingly challenged by the burgeoning influence of the US dollar. The financial gravitational pull of the world was perceptibly shifting, even as London's institutions maintained a veneer of their former glory. The Great Depression, global shockwaves, and London's vulnerability.
The illusory prosperity of the 1920s culminated in the devastating Wall Street crash of 1929, unleashing a global economic contagion. The Great Depression plunged the world into a protracted period of economic contraction and uncertainty. While the shock originated in New York, its systemic effects reverberated across the globe, exposing the underlying fragilities of the existing financial order. London, already weakened by war debt and struggling with persistent economic issues, faced renewed pressures. The sterling crisis of 1931, culminating in Britain's abandonment of the gold standard, was a symbolic capitulation of its monetary supremacy. While the City of London demonstrated a certain resilience, particularly in its traditional roles of insurance and shipping, its capacity to dictate international finance had been severely diminished. The global liquidity crisis forced many nations to retreat into protectionist policies, further fragmenting the international financial system that London had once so masterfully orchestrated. World War II. The Bretton Woods reshaping of the world order. The Second World War delivered the final, decisive blow to London's financial hegemony. Britain, once again at the forefront of a global conflict, faced an existential threat that pushed its economy to the brink of collapse. The nation's survival hinged significantly on the economic and industrial might of the United States. Through programs like the Lend-Lease Act, America effectively became the arsenal of democracy, providing vital supplies and credit that sustained the British war effort. This unprecedented dependency solidified the United States' position as the unassailable economic powerhouse. As the war drew to a close, the victorious Allied powers, primarily the United States and Britain, convened at Bretton Woods in 1944 to design a new global financial architecture. Under American leadership, this conference established the International Monetary Fund and the World Bank, and, most crucially, pegged the world's currencies to the US dollar, which in turn was convertible to gold. This agreement, orchestrated by the financial architects of the victorious American administration, formally enshrined the dollar as the world's reserve currency, marking the definitive transfer of global monetary supremacy from London to New York. The financial torch had definitively passed. The aftermath, adaptation and resurgence in a new order. In the post-war landscape, London, though no longer the financial hegemon, proved its remarkable capacity for adaptation. Stripped of its imperial dominion and the primary global financial leadership, the city reinvented itself. The 1950s and 60s saw the emergence of the euro-dollar market, a crucial innovation that allowed for offshore dollar-denominated deposits and lending. London swiftly became its operational hub, reclaiming a significant, albeit different, role in international finance. It transformed from a colonial financier to a sophisticated global financial services center, thriving on its expertise in international law, insurance, and highly specialized banking. While Wall Street continued its ascent as the undisputed capital of global investment banking and capital markets, London carved out a powerful secondary global hub. This was not a reassertion of its former supremacy, but a strategic resurgence within a new American-centric world order. Conclusion: the enduring legacy and evolving power dynamics. The secret history of London's financial decline is not a tale of sudden collapse, but a compelling narrative of gradual, often imperceptible shifts. It underscores the profound truth that financial power, like all forms of power, is fluid, dynamic, and subject to the relentless currents of geopolitical change and economic exigency. From the imperial machinations of the East India Company to the immense industrial output of America, and from the devastating fiscal strain of 2 world wars to the calculated diplomacy of Bretton Woods, each event chipped away at London's singular dominion, progressively transferring it across the Atlantic. Today, the dollar remains the world's primary reserve currency, and Wall Street continues its commanding influence. However, the contemplative financial tapestry is ever evolving, with new challenges and potential shifts emerging from various corners of the globe. Understanding this historical paradigm shift provides invaluable insight into the immutable laws of economics and the enduring, often concealed battles for financial supremacy that continue to shape our world. The story of London losing its financial empire is, in essence, the genesis story of the modern global economy as we know it.